Hey, what's going on, everybody? It is Monday, March 7th. Still got war raging on in Ukraine. It's a terrible tragedy which could have been avoided. Just a senseless and needless loss of life, destruction of a country. Anyway, we all know what's going on, and it's horrible to watch. And I hope it ends soon. I hope we get peace. Today was a bad day in the market, no doubt about it. It was the worst day I think I read in the S&P since October 2020. That was a pandemic related back then. Today it is kind of a meltdown all over the place. We have surging oil prices, as you all know. Crude hit $130 a barrel, WTI today. We pulled back. I think we settled somewhere around 122. Let me make a comment on oil, and not to downplay the negative impact. I'm not trying to do that, but I'll just say if we go back and look at the oil price run up from 2004 to 2008, basically oil prices went from like $40 a barrel up to $150. That did not have a negative consequence for the economy. It did not throw the economy into recession. However, the subprime debacle did. And again, I've spoken a lot about the subprime that could have been avoided if the proper measures were taken. It took the Fed a long time to react. The Fed was asleep at the wheel in terms of regulating and overseeing the types of investments that the banks were going into. And also we had at that time, something I've been pointing out, that household debt burdens were at an all-time record high. So there was a vulnerability there. We don't have that now. But again, I'm not trying to downplay this oil spike, and it could definitely continue. Now the talk is that the United States and the EU, they're discussing an embargo of Russian oil. Right now, Russian oil is not sanctioned. Okay, it's still flowing, which I find that to be, frankly, again, another example of the hypocrisy of the West. Like, we'll sanction you to death, but we need your oil, we need your energy. So again, it's just sheer hypocrisy. Like, if you're gonna go at it, and if Russia's the evil villain country of the universe, and you want to destroy it and you want to bankrupt it, then I say, stand on your principles. Like, what is this? Like, we'll sanction you to hell, but no, we need your oil, so please give us that. I think that's total bullshit, but that's the hypocrisy of the West. Anyway, this is what they're talking about right now. If you didn't know, the United States also exports, right now we're exporting about 3.6 million barrels a day of oil, almost 3.7 million barrels a day of oil. Like, if you want to ban something, how about banning exports, U.S. oil exports? I mean, if the situation is such that we really need that oil, like, man, we really need that oil, why are you exporting 3.7 million barrels a day? I mean, to me, that's an easy thing to do, and maybe that's why they're not doing it. We don't want to do that. It's too simple. It's too easy. I mean, Biden could do that by an executive order. Trump did that. I mean, Trump was the guy who boosted historically U.S. exports of oil, of crude and petroleum products. I mean, until Trump came in office, it was banned. I mean, there were no exports, or very, very few. And then he really ramped that up, and he was like, yeah, you see, I'm making money for America. Who made money was the oil companies. That's why that whole thing with the pipeline, what's it called? I forget the name. That pipeline that was running across the country, that was just flowing from Canada, taking oil from Canada to the Gulf and exporting it out. So, I mean, who benefits? Foreigners benefit from cheap oil, and Canada gets their oil to transit straight across the middle of the United States, and then it gets shipped out overseas. So the whole thing is a bunch of hypocrisy. Anyway, let's talk markets again. if oil keeps going up, and it does look like that right now because, nobody's taking, well, we're taking Russian oil apparently. But if that ban goes into effect, then, I hear $200, I hear $250, I hear $180. Those numbers start to have a real negative impact on the economy. I think I mentioned that for every $10, this is my kind of back of the envelope calculation. If I'm looking at how much we import and how much we export, like the net imports. So that's, those are income transfers that flow out to the foreign sector. So it's a subtraction from income flows here domestically, okay? So every $10 is 14 billion annualized. You have to understand that. That's annualized. That's about 0.07% of GDP or something like that. A $10, that's 14 billion. Now we did about a $30 rise. I mean, we went from like $90 last week or just before last week to 120. So that's 3 times 14 is 42 billion annualized. That's about a 0.2% subtraction from GDP so far. That's not a big deal, okay? But if we go to 200, then you're talking about a 128 billion monthly subtraction. So if we're looking at, like, let's say fiscal is running at 550 billion, all right? We're right down close to that 400. That effectively puts fiscal, those income transfers, because you got to subtract out what's going out to the foreign sector with those oil payments. That effectively brings the monthly flow somewhere down around 400 billion. I don't know, maybe even less. That would bring us below the pre-pandemic fiscal level. And I think that would subtract a lot off the stock market, if you ask me. Now, we're not there yet. We're not at 200. I say right now, at 120, I say the economy can handle that. Fiscal right now is, we're trending like 750 billion for the month. All right, but that's going to be only, we did February had 609 billion. March we're trending, right now around 750 billion. We got all these IRS tax refunds going out, but that's going to drop off. Okay, so we can't really count these 2 months as something which is going to be a steady fiscal flow at this level. So you get oil up around 180, you get it up at 200, and yeah, that's going to have a very negative effect on the economy. It's probably going to put us into recession. But I will say this right now at 120, to me, that is not so damaging. We can handle that. There is not a bullish commentator out there at all, and probably for good reason. We're in a war that has the potential of, I think it already is World War III, if you ask me, because as I said in my previous video, sanctions are an act of war. They do the same thing. Sanctions kill, sanctions destroy economies, just like bombing of factories and rail lines and shipping terminals and everything else like that, and ships. They destroy and they kill. Now, it's maybe a slow motion effect, maybe not even so slow motion effect. So this is already World War III. It could be escalated up where now if it's escalated up from this level, basically then we're in nuclear war, and thinking about the markets is like ridiculous at that point. That's just like should be your absolute last concern. Your concern should be survival, which is probably highly unlikely. And there's a lot of people, I think the polls now are saying that 74% of Americans want a no-fly zone over Ukraine, and that would lead to a direct engagement with Russian aircraft and shooting them down. And then again, that's you're going nuclear after that. But I want to stay focused. As crazy as this sounds, I want to try to stay focused on the market. I want to try to be clear-headed and rational about this. Until that thing, God forbid, happens, let's try to stay focused. What I was saying is that there are no bullish commentators out there. Maybe me, I'm slightly leaning that way, but it's hard, I have to say, because we don't know the extent to which oil is going to continue to go up. And it's not just oil too, it's all commodities, and it's food costs, wheat, again, lock limit up. I don't know, it's like something like 12 or 13 days lock limit up or something like that. And I spoke about that in my last video. People are going to starve. Same thing as war. So let's look at the sentiment. Obviously, sentiment is really, really negative. But if you look at some of the gauges of sentiment and market psychology that I look at, like last week, the AAII weekly sentiment survey, and even the put-call ratio, I mean, those things are elevated. The bearish levels are elevated. The bullish levels are way low. But it's not like the spike we saw in April 2020 with the pandemic and the shutting down of the economy. I mean, so if you take that as a gauge, you probably, it's justifiable to say, hey, we need to get up at least around that level again to really have a psychological environment that completely has discounted the worst that could possibly happen. And I don't think we're there yet. But that doesn't mean it has to get there. I mean, if we could see oil prices contained around this, look, they're trying to pull off an Iran deal now. I understand there's a hitch in that because the Russians are demanding written guarantees from the United States that if they pass the JCPOA, and Russia is a party to that deal. I think you have Russia, you have the United States, you have France, and the EU. I think you have Canada and UK. They're all part of that deal. Russia is and China is also a part of that deal. I think Russia is demanding that a written guarantee that if that agreement is passed and the sanctions are lifted against Iran, that Russia will be able to continue operating in a commercial way with Iran as normal, that it doesn't affect. Like, in other words, the United States can't say to Iran once they lift the sanctions, hey, why are you trading with Russia? All right, we didn't want you to do that, so we're going to put the sanctions back on. I think that is the sticking point right now. If they work that out, then we will have an agreement. It's very close. I mean, it could have been signed any day now, but I think they have to overcome that one objection on the part of Russia. And if that happens, and I don't know how quickly, I think Iran said in 3 months they can get up to their normal rate of output, which I'm not even sure what that is. But that would help. I think that would help. And then we hear Biden is talking to Maduro. See, this is the insanity of our policymakers, if I may, speak to that. I mean, we sanctioned the shit out of Venezuela and Maduro, and now we need the oil. So now we're crawling back over there and begging, or supposedly we're sending a delegation over there to meet with them, or there are already talks in progress with Maduro. Hey, we need you. Now we need your oil. Sorry. It's hypocrisy of the highest order. I'm sorry. It's a hypocrisy of the highest order. Same thing with what's happening with Iran now. There was no interest at all in normalizing relations or lifting the sanctions on Iran or getting back into a nuclear agreement with Iran until this happened, and now we need the oil. And a lot of people are saying, hey, just produce in America. That's not going to do it. That is not going to do it. All right? First of all, even with the price increases that we have seen, U.S. production is stuck at 11.6 million barrels a day. And I mean, it's been stuck there for a long time. As a matter of fact, last week, we actually saw rig counts operating in the U.S. go down. Rig counts went down, not up. it's not like you can flip a switch and all of a sudden you bring production back to whatever, 13.2, 13.4 million barrels a day. I mean, it doesn't work like that. I mean, people saying, hey, let's just use American oil. Well, we don't have it. And again, we're exporting almost 4 million barrels a day. I mean, what kind of sense does that make? That's ridiculous. That's the easiest thing to do right now, is to ban exports, keep the oil here. Anyway, whatever. So look, one last thing I want to mention in the markets, just from a technical point of view, the February 24th lows. Remember I talked about that the day before. I said if we broke down in the S&P, I think the level was 42.12. I said buy that dip, and then we were up like 800 points the next day. We're still above that low of February 24th in all of the major averages. So, that might hold. I mean, we have a tremendous amount of negative sentiment now. We'll see what happens with the Iran deal. There's been, again, not peace negotiations, but ceasefire negotiations. The third day of negotiations between Russia and Ukraine. Russia has given some demands. They want Ukraine to recognize the Donbass as independent, and they want guarantees that they will not join any alliances. That's not going to happen, because the United States does not want that to happen. They want Ukraine to continue fighting against Russia, to bankrupt Russia. And also, if you didn't know this by now, you need to do some reading and some research. Zelensky, who's being portrayed as this great hero of the nation, he was actually elected on a promise to normalize relations with Russia, a peace promise, and he was quickly turned around by deeply entrenched Nazi elements in his government. I went through that in the last video. If you don't believe me, there's lots and lots of information on that, who's who within the government. And in fact, there was one episode where Zelensky went to eastern Ukraine and he met with members of the Azov battalion, and they told him right in his face, like, fuck you with your peace agreement. We're going all out with this. So it was either that or he'd be eliminated. And by the way, they did yesterday or over the weekend, they killed the main Ukrainian negotiator. He was shot dead on the streets of Kiev by the security services of Ukraine. If I was Zelensky, I'd be a little bit nervous right now. Anyway, that's it for today, folks. A little bit of a long video, but I hope everybody's doing well. Hang in there, man. Let's just pray for peace. Bye.